Glad you brought that up, Stephanie. I know you're in town in Singapore for a UBS Sustainable Finance Conference there, right? So I'm curious, what are you telling clients, investors, potential investors when they come at you with information? And these are not stupid people, right? They've had a look at some of the outflows coming out from ESG, a lot of sustainable funds in the U.S. And, I see a report that BlackRock just told regulators that's closing a pair of sustainable EM bond funds as well. Why this? Is it really an exodus, or is it just a trickle of money that's leaving?
It is very region specific, so it is more difficult in the U.S. But if you look at, for example, Morningstar data, last year, even when the global asset management industry lost $1.3 trillion in assets, the bloodbath, however, SI funds continue to see net positive inflows consistently on a quarterly basis. Even in the recovery year to date, as of first half, sustainable investing funds gained $51.2 billion in net inflows, whilst non-SI got 2.4. So SI remains a growth area, and private capital, institutional capital remains committed. Now, what is happening on the kind of relabeling front is really a backlash of the regulatory landscape having tightened for the past 2 years, and it's actually increased the pressure on practitioners on the the burden of proof that you have to deliver to match the claims that you have. And this, I see this as a long-term good problem. It's just that over the past 2 years, you've had some iteration of where the regulatory pressure, how hard it should be, where it should sit.
So Stephanie, the greater regulatory pressure, you think is a good thing simply because, and this is a fact, there has been a lot of greenwashing, has there not?
I think greenwashing, to clarify, greenwashing is when the product is actually overstating the claim.
Yeah.
So if you look at across the different asset classes and strategies we have, there are strategies that we would clearly earmark as potentially impactful, but then there will be others that, it's really talking about alignment. So if someone is selling you like a global equity, low risk ESG ETF and saying that you can change the world, that is inappropriate, right? But it doesn't mean that in the field we don't have the tools to express these fields. Okay. So it's just really, I think there's a risk of oversimplification, right? You can't look at everything like a one-trick pony, like everything in the same boat. And I do believe that increased transparency requires education on all sides. So, consumers also have to put some effort in to understand what they are investing in, like now that all the disclosures are coming out. So that's why I think that, long term, the regulator is actually pushing us to educate ourselves, educate the market, such that we can go into the next growth phase.